expenditure of 204.28 trillion naira, excluding the capital component of statutory transfers. 456.46 billion naira was provided in the 2018 budget for statutory transfers. The 5% increase over last year's provision is mainly due to increases in transfer to Niger Delta Development Commission and the Universal Basic Education Commission, which are related directly to the size of oil revenue.
All right, today we're focusing on the top 5 allocations for capital spending in 2018 budget, which includes the Ministry of Power, Works and Housing, about 555 billion naira, transportation, 263 million naira, special intervention program, 150 billion naira, defense, 145 billion, and agriculture, 118 billion naira. Right, joining me to discuss this in the studio is the head of research at Afrinvest, Robert Omotunde. Many thanks for your time, Robert.
Thank you.
All the time. Yes. First off, there seems to be an improvement with the presentation of the 2018 budget. It comes in early because from antecedents, it's on the average about 5 months. It takes about 5 months for the budget to be assented to after the president has presented it. But what's your take on this early, if I would say that, presentation?
Well, we think it's an improvement on what we've been having. I think last year, the 2017 budget was presented in December, even though we didn't get it passed until about half year. This is coming in November, and we are expecting that by the first quarter of 2018, this budget is going to be passed and the government can swing into action very quickly. Remember that 2017 budget was tagged a recovery budget, and this is a consolidation on that. So the spending, the expenditure layout, as presented by the president, suggests that this government is committed to actually reflating the economy. They've maintained an expansionary budget from 2016 to 17, and now this is 2018. So for us, it's laudable. The major issue to now worry about is the speedy passage of the budget. Of course, we've seen that the National Assembly and of course the executive, there were a lot of comments that was made when the budget was being presented by the National Assembly the need to consolidate.
All right, speedy passage and of course implementation from Robert Omotunde. Also joining me now via Skype is the Chief Executive Officer, Cowrie Asset, Johnson Chukwu. Many thanks for your time, Mr. Chukwu. Yes, this budget, on assumptions, we have the benchmark oil price at $45 a barrel, crude oil production at 2.3 million barrels, exchange rate at 305 naira to the dollar, the real GDP and the inflation rate. All these assumptions, and let's look at the capital expenditure. There has been an increase by 11% from 2.18 trillion in 2017 to 2.43 trillion. Infrastructure development is, of course, very important for the development of any economy. And from what we have earmarked for 2018, do you think with these assumptions that we have, it can be achieved?
Yes, I think the budget assumptions are achievable. If you look at the basic parameters, you have a $305 naira exchange rate, 305 naira to a dollar exchange rate, which is the only area I have my issues. But if you look at the other basic factors, you look at the crude production of about 2.3 million barrels a day, which today we're doing close to 2 million barrels a day. If you add the condensate production, we'll be close to 2.3 million barrels a day, provided we're able to sustain the peace in the Niger Delta. Then on the benchmark price of $45 per barrel, last year we had a benchmark price of $44.5 per barrel. Over the past 6 months to close to 1 year, we've had a crude price trading above $50 per barrel. And from all analyst projections, crude will remain above $50 per barrel. So I think a projection of $45 per barrel is quite realistic. Then the other core assumptions are that you're going to have a non-oil revenue of about 4.1 trillion. That might be a stretch target. But I also believe that the government really pushes. If the budget passes in time and the implementation starts in January 1st, then we should be able to push for an increase in non-oil revenue. For instance, if you look at the Moody downgrading of Nigeria's rating, it said the government has not succeeded in diversifying its revenue streams. And the president's presentation said that we are going to shift from oil revenue to non-oil revenue. And that's why you're looking at a $2.4 trillion from oil revenue for federal government and $4.1 trillion from non-oil revenue, which is actually a shift from what we have in the previous years. I think on the balance, the figures we have are achievable.
All right, the figures we have are achievable. Yes, with the crude oil benchmark price at $45 a barrel, it leaves room for growing the excess crude account. But on the flip side, Chukwu talked about the assumption of the 305 exchange rate to the dollar. It seems it's not reflective of the market rate as we have it. What's your take?
Well, correct. But as we would note, of course, at 305, which is the CBN spot rate, is not reflective of what the market rate will suggest, and we would think that the government would have taken advantage of the fact that we have exchange rate at 360 naira to the dollar, especially at the investors and exporters window, to leverage towards fixing most of the fiscal challenges we have in terms of revenue. You know that a lot of the states have been struggling. If we have had an exchange rate that is reflective of the market, it means more money for the states to share. But again, we note that the reason for keeping the exchange rate may be for some, political consideration. The fact that the pump price of crude oil, of oil, it's tied to an exchange rate which the CBN and of course the government may be more comfortable with an exchange rate that does not cause, an increase in the pump price, which then leads to some, political issues, especially now that we know that we are entering into the election cycle.
All right, the issue of debt servicing is also one to look at, but that would be after the break on Business Nigeria. To stay with us. Where did he go before? Are we on, you on break, right? All right. Hello, Mr. Johnson.
Yes.
Yes, I can see you loud and clear.
Okay, good.
And I can hear you loud and clear. What were you saying, Taiwo?
What?
Okay, they said your picture was bad earlier, but it's now crystal clear.
Okay, good.
All right, I will be with you shortly.
Okay, no problem.
Yeah. You're watching Business Nigeria, and we're talking the 2018 appropriation bill presented by Nigerian President Muhammadu Buhari to the Joint National Assembly on Tuesday. I've been speaking with the Chief Executive Officer, Carry Assets, Johnson Chukwu, and also the Head of Research at Afrinvest, Robert Omotunde. All right, let me come to you now, Johnson Chukwu. Yes, as predicted in the 2017 budget, debt servicing in 2018 has hit over 2 trillion naira. Now with this, 34% of the revenue to be earned in 2018 will be used to service debts. And from what President Buhari presented, there was an increase by 21% from 1.84 trillion naira in 2017. Of course, this includes the sinking funds for matured bonds. Do you think the budget or the government is looking in the right direction with servicing the debts with the revenue?
Well, we have to recognize that one fact, and that is that debt service obligation is a compulsory obligation. Once the borrowing has taken place, when the debt has been incurred, the government or whoever has borrowed has the compulsory obligation to service the debt. We have seen a sharp increase in our debt profile in the past 2 years. Of course, the implication of that our debt service obligation was also going to increase. And that's why you are seeing that increase to 2 trillion. But the most important thing, the government seems to have a strategy to exit the high cost debt. And the government said they're going to refinance local currency debt with foreign currency obligations. The government has said, the president in his announcement said that of the currently we have 79% of our total debt that is naira denominated, local currency denominated. And if you look at the price of our local currency debt, you find out that the short-term debt instruments, the treasury bills end of the market, cost the government about close to 36% per annum. The bond segment, the long-term debt instruments are costing close to 16% per annum. So if we refinance them with foreign currency debt, that's when you're going to begin to see a reduction in our debt service obligations. Without that, it is not strange. It's most expected that our debt service obligation would have increased because our debt profile had also increased. But if the government succeeds in implementing its policy of having only 60% of the debt in local currency, then by 2019, we should see a reduction in our debt service obligations.
All right, you listen to Johnson Chukwu. It's all about assumptions. If government succeeds, and of course we're going to be servicing this debt with a revenue. But looking at this revenue, there's only, it's projected that there'll be a 30% increase from what we have to 6.61 trillion naira. But that's still relatively low as a percentage of GDP. We're going to be looking at about 6.5%. Don't you think it is still quite low?
Of course it is. If you analyze now Nigeria's revenue to GDP and you compare it with most countries, you know, whether you're looking at the BRICS average or you're looking at the global average, you know, we've always talked about the need to diversify our revenue base, you know, and increase tax revenue of government, you know, and this budget has suggested that the revenue of government is going to be more diversified, and this is the third time that we're saying this. Unfortunately, when you compare with actual, you know, we've not really seen so much traction that the non-oil revenue, you know, is generating, even though we've seen a lot of improvement in terms of revenue that is being generated from taxes. For example, one of the assumptions that have been made in this budget is on independent revenue, which is the surpluses from ministries, departments, and agencies. It's been projected at about 800 billion naira. The projection for 2017 was 600 billion, you know, but as at third quarter, what the government has realized is only about 150 billion, you know, and then this projection of 800 billion to us seem unrealistic, you know, and that is why when you have a budget assumption that is predicated on some of the factors that we think may challenge the revenue sources of government, then what you see is increased leverage, especially from the recurrent end. What then to suffer at the end of the day is a capital end of the budget. You know, 2017 budget, only about 450 billion naira has been deployed to capital projects. You know, so we are just hoping that in 2018, which is a budget of consolidation, you're going to see more spending in capital projects. 2 trillion naira has been projected for spending in capital projects, especially in critical sectors of the economy. Okay,
we'll remain with that line of thought about capital spending on infrastructure, and looking at the president's allocation to the Ministry of Power, Works and Housing, 555.88 billion naira. That's, to me, it's a mega sum. Johnson Chukwu.
Come again.
Yes, we're talking about capital expenditure and what was allocated to that, staying in line with Robert's thoughts. Now, the Ministry of Power, Works and Housing was just allocated 555, about that amount, billion naira. Don't you think that's still very low for that sector?
Yeah, particularly for the work segment of it, the works and housing. Recall that the power sector it's partially privatized. When I mean partially privatized, the distribution company and the generation companies are in the hands of the private sector. It's only the transmission side of it that's with the federal government. And today we have capacity to generate only about 7,000 megawatts. So in terms of transmission capacity, that's where the government will have to invest. We have to invest in the power sector. So the major beneficiaries of that 555 5 billion naira would be the particularly the works segment of that ministry. The housing segment, the government was talking of some local housing that would apply to the indigent citizens. But if you look at, I don't know how that 550 billion would be shared, but let's even assume the works ministry takes a chunk of it. The government, the president announced that 300 billion will go to maintenance of some critical road infrastructure. So at least you know that 300 billion of that 555 billion will go to the works ministry. The president also made mention of the fact that we don't have the resources to build the infrastructure, that the government will adopt some level of PPP scheme. They made reference to two of those schemes. The Lagos, the Apapa Badagry Express Road, the Approach Express Road, that is being jointly constructed by the Nigerian Port Authority and some local businesses for the benefit of getting tax credits. I think what the government needs to adopt for the benefit of getting tax credits. I think what the government needs to adopt, if we have to build the right infrastructure, is we need to evolve a mechanism to bring in private capital into road infrastructure. Otherwise, budgetary allocations will never be enough to build a critical infrastructure that will catalyze economic development. And I think the government should take cognizance of that.
Yes, the government should take cognizance of that. Still on that, Ministry of Power, he said, yes, most of it has been privatized. But if we're going to be looking at what has been happening in recent times, we'll see that many of them still ask for some sort of loan from the government, some sort of bailout from the government. So how do you think, with this sum that we have, that's going to be achieved?
Well, I think John already spoke widely on that. The power sector, it's very critical, to developing this economy, and it's a tool that the government has identified as a major way of empowering the private sector and growing businesses. And that's why you're seeing the sort of investment that the federal government has been doing, even though it's a privatized sector, like he mentioned. You see how N8 comes into play, in trying to ensure that cash flow is guaranteed within the sector, because most of the time, especially in 2016, some of the issues we had with power generation and of course transmission and distribution was the liquidity issue of the sector. So what we saw the government doing in 2017 earlier, I think that was in February, was N8 coming out to guarantee through, of course, the intervention of the CBN up to an amount, 701 billion naira, to ensure that when the generating companies generate power, they get payment, from the distribution companies. That's a sort of stabilized, the sector. Plus the fact that government is doing a lot of investment in transmission, we have a capacity to generate, but because the transmission company of Nigeria is still held by the government, you see that a lot of investment is still going into that sector, so that as we speak, as the president mentioned during the speech, we have capacity to transmit up to 7,000 megawatts, even though we know that there is still some constraints with some of the transmission substations, such that we cannot actually wheel more than 5,000 megawatts of power. So I think the government is doing the right thing, investing in that sector.
Okay, let's tie these two areas now, Johnson. Yes, the government allocated 118 billion naira to agriculture, and is also assuming that inflation rate will drop to 12.4%. Even Governor Emefiele also predicted or projected that it would drop to a single digit by end 2018. But with what has been allocated to agriculture, we still have food inflation on the high. It's only headline inflation we'll see declining so much. Do you think this can be achieved? 12.4%?
Well, when I made a general statement that the budget targets are achievable, that they are realistic, I included, obviously, the 12.4% inflationary target. If you consider the fact that inflation had dropped from 18.7% to about 15.9%, and that we have achieved some level of stability in FX, which was one of the factors that triggered the uptick in inflation. And it is likely that we are going to see further appreciation of the naira in the coming months. if oil price remains above $55 per barrel, you're likely going to see a lot more foreign currency inflows from foreign portfolio investors and from foreign investors, because confidence will be built in the economy, and that could lead to further appreciation of the naira. And if an appreciation of the naira will moderate the rate of inflation, one of the major challenges we have is that most of the inflation we suffer here are pass-through inflation because of, import-induced pass-through inflationary effects on local prices. On the food inflation you did mention, I want to believe that whatever policy the government has been implementing on the agri sector should begin to bear fruit. We've not seen the result of that. We've not seen a drop in food prices. We're actually seen a very obstinate food price inflation in the past couple of months. And we've also not seen GDP growth rate in agriculture improving. Rather, we have seen a declining GDP growth rate. So if the government policies on agriculture begins to bear fruit, we should see an improvement in food inflation. The challenge we have today is particularly food inflation. And if food inflation should moderate, we should easily achieve a 12.4% inflation in 2018.
All right, I could see that you were trying to react to this, Robert.
Yeah, so for us, there are three major factors that are threat factors to inflation, truth be told. Why we would think that the 12.4% target, may be achievable. But when you look at the electricity tariff, which is currently at the price that it is, even though there are reasons to have seen some increase, in based on MITO 2, which was agreed. We are likely going to see a situation in 2018, when there will be the need to adjust the pricing in that particular sector. The other part is the pump price of petrol, even though the government is trying to keep it so that we do not, run into some issues. And of course, on food prices, we've seen that the high base effect that we had in 2017, is going to serve as a cushion for 2018, such that net, when you're looking at inflation in terms of headline inflation, you will likely see sort of an average around the 12% bound.
All right, all of this can be achieved only if we have implementation from the budget. Well, I must thank you both, Head of Research at Afrinvest, Robert Omotunde, and many thanks to you too, to the Chief Executive Officer, Carry Assets, Johnson Chukwu. We appreciate your time on Business Nigeria.
My pleasure.
And crude oil prices steady below two-year highs on Thursday as a result of supply cuts by major producers. At the London market, the Brent crude trades at $63 a barrel, and for the OPEC basket brand, price moves up by more than 1% to sell at $62 a barrel. Analysts say markets could be vulnerable to sell-off after months of gain. And that's it on Business Nigeria. Thank you for watching. I am Yemisi Lanredo. Bye-bye.